Your money's about to be worthless. Here we are, Monday, March 2nd, and I want to talk to you about something that should matter to every single person watching this right now. Your money. The purchasing power of the dollar sitting in your bank account, and why a series of events unfolding right now over the weekend, over the last several weeks, over the last several months, all point to the same uncomfortable conclusion. The world is being redrawn, and most Americans have absolutely no idea what that means for their wallets. Let me walk you through it, because once you see the full chessboard, you cannot unsee it. This weekend, the United States launched military action against Iran. The president has framed it as Liberation Operation Iranian Freedom. Some of my friends are already calling it with a mix of sarcasm and genuine alarm. My isolationist friends losing their minds. Why do we care about the freedom of everyday Iranians? They're asking me. Didn't we learn anything from Iraq? And look, I get it. The PTSD is real, but I want to pull the camera back, way back, because when you zoom out and look at the entire globe, Iran's not just a country, Iran's a lever. It's one of the most powerful levers on the entire geopolitical chessboard, and whoever controls that lever controls a staggering amount of what happens next in the global economy, the AI race, the future of Europe, and the trajectory of a potential conflict with China over Taiwan. And all that, every single one of those dominoes lands eventually on your doorstep, in your portfolio, in the price of groceries and the value of the dollars you spent your whole life earning. So let's talk about it honestly. First, understand what Iran actually is in global terms. It's a major oil producer. China buys enormous quantities of Iranian oil. China also buys Venezuelan oil. And here's where the story gets interesting, because if you recall, we already made our move on Venezuela. Maduro's gone. We've had our fingerprints on that process one way or another, and the generals there were either bought or neutralized. So now look at your energy charts. Since the capture of Maduro, oil refinery companies like SLB and the majors like ExxonMobil, ticker XOM, have been drifting quietly and steadily upward. Not exploding, not making headlines, just grinding higher. Because the smart money understands that access to and control over global oil supply is being consolidated in a way we haven't seen in decades. That drift higher in XOM and SLB is not an accident. It's the market beginning to price in a world where the United States has a very strong hand on the oil reserves. Venezuela in one hand, and now potentially Iran in the other. Now here's the part that matters to your money right now today. When the news broke about Iran over the weekend, oil gapped up. Of course it did. Conflict in the Middle East, major producer. The market's reflex is to buy energy. But then, and pay very close attention here, oil sold off. The gap filled, and that sell-off is telling you something critical. The market may already be pricing this in, or at a minimum, the market's skeptical that a disruption to Iranian supply will be sustained enough to move oil structurally higher from here. What that means practically is this: don't chase oil stocks right now expecting a war premium to carry them. The Iran spike may be a head fake for oil traders. The smarter play is not buy oil because there's a war. It's understanding the deeper second and third order consequences of what happens when America effectively controls two of China's biggest oil suppliers simultaneously. And that consequence is leverage, massive historic leverage. Here's reason number one: this whole Iran move makes strategic sense beyond the freedom and democracy talking points. China and the United States are heading towards trade negotiations. A deal the president has telegraphed is coming in the next couple of months. When you sit down at that table, what do you want in your hand? You want to be able to look across the table at Beijing and say, quietly, without saying a word, we control a significant portion of your energy supply. We have Venezuela, we now have Iran. You want to invade Taiwan? You better think about whether your economy can run without that oil, because we have opinions about where it flows now. That's leverage you can't buy. That's leverage you can only seize. Reason number two, Taiwan. China's made no secret. Their own military planners have published timelines that an invasion of Taiwan is on the table by 2027. An invasion requires fuel. It requires a functioning economy behind it. If we control Iranian and Venezuelan oil, two of China's key energy lifelines, we've just handed Beijing the most painful calculation imaginable. Do you invade Taiwan and risk your economy seizing up, or do you stand down? That's a check on the chessboard that costs far less than a carrier group in the Taiwan Strait. Reason number three, And this one's critical for every investor watching. The AI race. We're in an arms race for artificial intelligence dominance that will define the next 50 years of economic history. And AI runs on energy. Data centers consume staggering amounts of power, training large models, running inference at scale, building the infrastructure of the AI economy. It all requires reliable, affordable, massive energy inputs. Controlling global oil supply is not just a geopolitical move, it's an AI strategy. Cheap, available energy is the substrate on which American AI dominance is built. If we can keep energy costs low and ensure supply security, we maintain our edge. If energy becomes scarce or expensive, the AI build-out slows, costs explode, and our lead narrows. Reason number 4, Europe. Europe's been on this green energy crusade, and while the motivations may be genuine, the practical reality is that European energy costs have been brutal, partly as a consequence of the Ukraine war and the severing of cheap Russian gas. If American-aligned Iranian oil starts flowing towards Europe, we give European governments an off-ramp from expensive energy. That buys their political cooperation. It gives us leverage to say, align with us on China policy, on trade, on tech standards, and we'll make sure your factories can afford to run. That's not just geopolitics, that's how you rebuild a Western alliance. Reason number 5, Russia. If Iranian oil flows to Europe at scale, Russia permanently loses its most important customer. Europe was Russia's energy cash register. Take that away and you've handed Putin the most powerful incentive imaginable to end the war in Ukraine and come to a table. You don't need more weapons shipments. You redirect oil and watch Russia's leverage evaporate. And reason number 6, the one the president's been most vocal about, the obliteration of Iran's nuclear program. Whether you believe it was fully achieved or not, removing or degrading that capability reduces the most catastrophic risk in the region, a nuclear-armed theocracy with apocalyptic theology. Now, and I say this with genuine humility about what happens next, you break it, you own it. Regime change is the hardest thing a superpower can attempt. We got lucky in Venezuela because we had the generals. Iran's different. Every general in Iran owes his loyalty to the Ayatollah, to the system of the Islamic Republic. To actually stabilize Iran, you need Iranian generals on your side. Without that, you topple the government and you get chaos. Or worse, you get an even extreme hardliner filling the vacuum. I pray that the people who planned this thought 10 moves ahead, because the best laid plans have a way of meeting reality. So where does that leave your money? Here's the picture. Oil gapped and sold off, likely already priced in. Don't chase it. The quiet drift higher in XOM and SLB post-Venezuela already told you that smart money was positioning in the energy infrastructure trade. So the broader energy opportunity may actually be more interesting, not in crude itself, but in the infrastructure layer. So the companies that build the systems to generate, distribute, and store power for the AI economy being built right now. The data center economy, the economy that needs power the way previous economies needed steel. And on that note, gold is surging today. Of course it is. Geopolitical shock, safe haven bid. Gold does what gold always does in moments like this, but here's what the charts are telling us, and this is important. We're pressing right up against a significant technical resistance level on gold right now, and while we've pierced it, we've not convincingly broken through. So think about psychology here. Everyone who bought the last peak and then watched gold collapse is sitting right at or near their break even right now. So a meaningful percentage of those investors, traders, are selling into this strength. They watched their position go red, they suffered through it, and now that they've been made whole, they're out. That selling pressure is real and it's visible in the price action. Gold could absolutely pull back from here before making a clean run at new all-time highs. So respect resistance until it's proven broken. That's a rule that's made investors, traders wealthy over decades. Don't assume the Iran trade automatically sends gold screaming through all-time highs. The market's partially digested this shock and gold's not exploding through resistance. So that tells you something about the near-term risk reward on the metal itself. Meanwhile, 2 names deserve your serious attention right now as genuine risk reward opportunities in this environment, and they tie directly to everything we've been discussing. The AI race, the energy control thesis, the data center build out that underpins American technological dominance, ticker DE, Deere and Company, and ticker VRT, Vertiv Holdings. So Deere sits at a compelling intersection of energy, agriculture, of course, and real asset infrastructure. It's the machinery backbone of the physical world in a moment when we're actively reshaping global supply chains and rebuilding American industrial capacity. Vertiv, VRT, it's even more directly wired into AI and data center buildouts. And this is the core strategic priority underlying all this geopolitical maneuvering. Vertiv makes the thermal management systems, the power distribution equipment, critical infrastructure that goes inside data centers. So every hyperscaler, every AI company, every cloud provider building the next generation of compute infrastructure needs what Vertiv makes. In a world where controlling energy supply is the strategic priority for winning the AI race, Vertiv is the company that converts that energy into usable computing power at scale. The risk reward on both names, given the secular tailwinds behind data center infrastructure and physical asset buildout, looks attractive relative to chasing oil futures on a gap that already filled or buying gold at a resistance level that hasn't cleanly broken. The chess pieces are moving. Iran is one node in a much larger game. Venezuela, China, Taiwan, Europe, Russia, AI, energy, it all connects. Your money sits inside that system whether you acknowledge it or not. And for our men and women in uniform, God bless them, because this is real and it's serious and they deserve our prayers and our gratitude, whatever we think of the politics behind this decision.